Welcome back to Wealth Talks with Sam, a podcast for single moms by a single mom. And today I want to talk about something real, something that affects millions of families but does not receive nearly enough attention. We hear conversations about the racial wealth gap. We talk about the income gap, the home ownership gap, the wage gap, and the retirement savings gap. But there is another gap sitting underneath many of those issues, and that is the credit gap. The credit gap affects where people can live, how much they pay to borrow money, whether they can qualify for a mortgage, and how easily they can access the financial tools that help people build. Yet many families do not even realize that this gap exists. So today we are going to talk about what the credit gap is, why it disproportionately affects Black and Latino communities, and most importantly, what we can begin doing about it, because this is not a conversation about shame. This is a conversation about information, access, and action. What does credit invisible mean? Let's begin with a term that some people may not have heard of before: credit invisible. A person is considered credit invisible when they do not have a credit history with any of the three major credit reporting companies. That means they may not be enough or possibly any information on file to generate a traditional credit score. Now, some people hear that and think, well, isn't it having no credit better than having bad credit? Not necessarily. Having no credit can still make it difficult to rent an apartment, finance a reliable vehicle, qualify for a mortgage, or receive affordable terms on a credit card or loan. In our financial system, lenders usually want evidence that you have borrowed money before and paid it back responsibly. But here is the problem. How do you prove that you can manage credit, and when no one has ever given you reasonable access to it? That is the catch. The Consumer Financial Protection Bureau found that approximately 15% of Black and Hispanic consumers were credit invisible, compared to 9% of white consumers. The same research found that additional consumers had credit records that could not be scored. So we are not talking about a small group of people. We are talking about millions of adults who are trying to navigate a system in which they barely exist on paper. The credit gap starts early. What makes this issue even more troubling is that the gap starts relatively early in adulthood. Research from the Urban Institute looked at young adults between the ages of 25 and 29. The median credit score was approximately 582 in majority Black communities, 644 in majority Hispanic communities, and 687 in majority white communities. That means young adults can begin their prime earning and wealth building years from certainly different financial starting points. Think about what that looks like in real life. Two people could have similar jobs, similar incomes, and similar goals. They may both want to purchase a reliable car, but the person with a lower credit score may receive a much higher interest rate. Now, their monthly payment is higher, more of their income goes toward interest. Less money is available for emergency savings, retirement, a down payment on a home, or investing. This is how the credit gap connects to the wealth gap. It is not just about whether someone is approved or denied. It is also about the price they are charged for access. A person with strong credit may be able to borrow money at a relatively affordable rate. I call that favorable rate. A person with damage limited or non existent credit may have to pay significantly more for the exact same product. That additional cost may continue month after month, year after year. Credit does not create wealth by itself, but access to affordable credit can make it easier to purchase assets, start businesses, obtain education, handle emergencies, and invest in opportunities. When access is limited or overpriced, wealth building becomes more difficult. This is not simply a discipline problem. Let me be clear. Personal responsibility matters. Paying bills on time matters. Managing debt matters. Living within your means matters. Reading contracts before signing them matters. I teach those principles because we must take responsibility for the decisions that are within our control. But we also need to tell the whole truth. The credit gap is not simply a discipline problem. It is also an access and design problem. Historically, many Black and Latino communities dealt with redlining, discrimination in lending, fewer traditional banks, lower property values, and limited access to affordable financial products. When reputable banks and affordable lenders are missing, something else usually fills the gap. You got check cashing businesses, they fill the gap. They charge fees to cash people's paychecks. You got payday lenders, they fill the gap. They charge astronomically high interest rates for people to borrow money. High interest installment loans fill the gap. Buy here, pay here, dealerships fill the gap. Predatory companies understand that people still need transportation, housing, emergency money, and financial services, and they take advantage of that. So they step into communities where better options may be scarce and offer access, but at a very, very high price. Urban Institute research continues to find that differences in wealth building opportunities and structural conditions help explain substantial credit score disparities between majority Black, Latino, and white communities. This is why I say this is not only about individual discipline. You cannot tell someone to make better financial choices while refusing to acknowledge that the choices available to them may be expensive, limited, or predatory. At the same time, we cannot wait for the entire system to change before we begin educating ourselves. Both things can be true. We can demand, we can demand a fairer financial system while also learning how to operate wisely within the system that currently exists. Financial education that makes people feel embarrassed. Financial education can interrupt the pattern. This is why financial education matters. And it's not the type that makes people feel embarrassed, not the type that assumes everybody started with the same information, and not the type that tells people just stop buying coffee as though a cup of coffee generates a financial inequality. I laugh because it's funny because a lot of people try to throw that, oh, well, if you not buy coffee, you'll be richer. $6 richer doesn't make any sense to me. But as I digress, I am talking about practical education, education that teaches people how to read a credit report, education that explains the difference between a credit report and a credit score, which is key. A lot of people do not know that there's a difference between that, but it's two separate different factors that you have to look at. Education that explains the difference that teaches people how interest works. Education that helps someone compare the total cost of two different loans. Education that shows parents how to prepare their children before they enter adulthood. And education that helps people recognize predatory products before they sign the contract. It does not solve every structural problem by itself, but it can begin dismantling the confusion, secrecy, and lack of information that allow the gap to continue. So how do we begin closing this gap? Let's make this practical. Here are several steps individuals and families can begin taking. First, find out where you stand. Pull your credit report. www.annualcreditreport.com. You get a free credit report each year. Pull it. All three major credit reporting agencies go through this, so it's important. Review the reports carefully. Look for any inaccuracies on your report, whether your name is spelled incorrectly, if it has a junior and you're not a junior, if the address is wrong, make sure all that stuff is legit. Look over all the accounts on the report. Anything that is inaccurate, dispute it immediately. After you check your credit report, now it's time to look at your credit score, because www.annualcreditreport only gives you a report, not your score. You can pull your score up from Experian. Most of your banks now provide your credit score. Get to know what your score is, and then we're going to take a plan of action. You want to know if your credit invisible. Are you on the board for a credit? Do you have a current credit score? If you don't, there are steps to take to build up your score. Traditionally, organically, you're going to get a secured credit card or a secured loan builder account where you're going to start building your score. Your scores could be built. You just have to be consistent with it. Third, you want to establish credit safety. Someone with no credit history, you want to make sure that you are protecting yourself. Have your credit locked once you start the process. These are things that are going to help you with building your credit and becoming credit invisible. And lastly, we do not want our children to follow in our footsteps. If you do not have credit established, once you get it done, I want you to make your child an authorized user on your account. Let's get them some credit history early. So I hope you guys enjoy this quick bite about the credit gap. This is something that I'm adamant about working with. helping families understand more about credit and how they can become credit visible. And I hope to see you guys soon. Have a great day.